Yo, what's up, you guys? Welcome back to another weekly market breakdown. We will be looking at the market from both a technical and a fundamental perspective. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you do enjoy the content, please do consider smashing that thumbs up button. Now, before we start talking about the jobs report, and dissect that information to see how it's going to impact the dollar this week, I just want to go over some of the questions that I have received on the last 3 days ago. So the first one is from Mateo, saying great and simple analysis. Thanks again for your time. You're welcome. Rolio Jack, you are the best. Thank you. Rolio, when are you starting the private participant signals? Probably soon, but it won't be called participant signals, or at least it won't be called signals. As always, on point. So yeah, probably soon. I'm putting together something which we could potentially, which I'll make available to the public potentially soon. Now, without any further ado, let's jump straight into it. We're going to talk about the jobs report that came through hotter than expected, and then we obviously had the unemployment rate that stayed exactly where it was. This gives us that overall bias that the Fed could potentially once again hike those interest rates, because they haven't done it at the last report. But we're going to look at the dollar from a pullback perspective this week, because the dollar is heavily overbought, and I do see the dollar continue higher, but I also expect a pullback first. First, going to look at this report over here. We can see that they've added 336,000 new jobs. On the previous month, the average hourly earnings month over month was exactly how it was supposed to be, and the unemployment rate also stayed consistent at 3.8%. Now, the reason why it's red is because this is the estimates. The Dow Jones' estimates is where basically investors are estimating what it could potentially be. Unfortunately, it remained the same, but the labor market is still continuing to grow. First thing we're going to look at is gold. It says here gold attempts to rebound, but heads for a second weekly dip on rate hike fears. They are saying that gold prices gained on Friday, helped by a technical rebound after a 9-day losing streak, although the jobs data raised worries about the US rate hike and kept the bullion on track for its second weekly drop. Now, because obviously during a time where the Feds is supposed to hike interest rates or to bring down inflation, people is supposed to lose their jobs in order for inflation to come down. And the way this works is very simple. Firstly, when the Feds hike interest rates, the ultimate goal is to discourage consumers to go out and spend. And consumers spend on companies that are listed on the top tech companies, or on all different companies that's on the Dow Jones, that's on the NASDAQ, the S&P 500 as well. Now, if consumers are unable to spend on companies such as Amazon, Tesla, and all of that stuff, these companies are not making money. So by definition, these companies are supposed to lay off people. We saw a couple of companies lay off people, but the labor market is still growing, meaning that the Feds are really not making the kind of progress that they were looking for. So we do expect the Fed to come through very positive with the interest rate hike, but we have to obviously monitor CPI data that's being released. Also, it says here the bounce in gold prices despite the strong job data indicates the selling pressure has been exhausted, and there's covering of short positions, said Tai Wong. Well, thank you for that. Next up, we've got the Dow Jones sours nearly 300 points as stock reversed sharp losses after a hot jobs report. That says here stocks rallied Friday even after the release of a stronger than expected jobs report data popped in Treasury Hills. So here the Dow gained 0.87% to close, the S&P 1.18%, and the tech-heavy NASDAQ 1.6%. It says here the US economy added 336,000 jobs. The Labor Department said economists polled by Dow Jones expected 170,000, blowing these numbers way out of the bucket there as well. It says here stocks posted a stunning turnaround on Friday after initially falling stronger than expected jobs report. Going into the new week, I do expect a weaker dollar in the short term, and I do expect the correction for the the stock market there as well. Now, the first thing that we can obviously see is that the market came back where it reached, initially broken above this very important structural level that we have identified over here. But again, there is still more room for the market to continue higher here as well. Now, the way in which I would obviously approach this is that we do have the potential sorry for that, but we do have the potential of the market printing this head and shoulders pattern here also. The best way to approach this from a technical perspective is obviously we have to wait for the market to pull back, and then once on the pullback we can definitely expect that continuation to the downside. What we have over here is a market that had broken above this level of resistance. Now this level over here, like there is a level of resistance, the market broke above that, tested it as support, broke below support, all of that supports now once again turned resistance. Now what I would wait for is the market to pull back and then move this continuation and then start this continuation to the downside. Then doing so, will the market also print what's known as a head and shoulders pattern, and a head and shoulders pattern is considered a bearish pattern from a technical perspective. Next up, we've got the German 30 has reached a target level, and once again we can see the market is breaking above this structural level over here. So I do expect once again pullback for this market to continue higher, to go back to this resistance that it had created over here. This was a crucial level for the market to break and close above on the daily time frame. This level over here acted as a level of support. The market broke below support, tested it as resistance, broke above resistance. I do expect a pullback and then a continuation to the upside going into the new week there as well. And this is exactly what I would like to see in there as well. Next up, we've got the NASDAQ. Now the NASDAQ, I'm currently holding a buy on here, so the NASDAQ I do expect to continue higher, and that is exactly where that level is over there. But I'm just going to remove this for the sake of this video. And what we have over here is we've got a market that had broken above this very strong, very important resistance over here. Firstly, we can see that this market was obviously stuck within this consolidation phase. The market now broken above that consolidation phase, and we do expect a pullback. But I do expect the pullback to come as we go higher, then the pullback, and then that continuation to the upside. And what I would also like to see is for the market to go slightly higher, pull back, and then continue higher, because we have this level over here that acted as a level of support. The market broke below that. All of that supports now once again turned resistance. So definitely expecting this move to take place. Next up, we've got the Dow Jones. The Dow Jones once again testing very important structure that I would probably want to see the market break above. But for where it is now, I probably see the market continue lower to that level. Alternatively, if we do get a clear daily break above that level on the pullback, I'm more than happy to look for buys. But for now, we are in sellers territories. It's important that we look for that sells in the market there as well. Next up, we've got gold. Gold's got a long way to the upside. Market found support. You can see here, printed a massive impulse, broke below support. All of that support's now turned resistance over here. Now, after an impulse, you expect a correction, and if you take your Fibonacci from the high to the low, what we have here is a 61.8 confluence that's lining up perfectly with this previous level of support that is now acting as a level of resistance. That's obviously highly important to monitor the price and wait as it develops bullish, as we do expect a deep pullback on the dollar index. I do expect this market to continue higher. It's very important that you do wait for the market to kind of create structure, break, and then on that pullback you can always enter. That just makes everything a lot easier, and it gives you a higher and a better risk to reward in terms of where you can put your target levels as well. If you remember this move that I had spoken about on US oil as well, this market printed this head and shoulders pattern, moved to the downside, found support here. I expect a pullback to at least a 0.382 of the Fibonacci taken from the high to the low. And what we have over here is we've got a 0.382 that's lining up perfectly with this previous level of resistance that got broke below support, and now all of that supports once again turned resistance. US oil, I do expect a slight pullback before this potential continuation to the downside. Not only that, but it would probably help us with fuel prices as well. That's currently sitting at 25 Rand. That is it for my side. I will drop another video for you guys tomorrow on currency pairs. If you have any questions, drop them in the comment section below, and please don't forget to smash that like button. Thank you for your time, and as always, cheers for years.